Yeah, starting to look real good. All right, so we have the cousins, aunts. We have 16 people coming. That's a 20-pound turkey. How much is going to end up on the table? And what does this have to do with income taxes? Welcome into 9.2, how we're going to go from gross to net. But before we get a little too gross, let's start challenging our perspective again. Remember yesterday, sales tax happens when you buy things. Good event. Income tax happens when you make money. Good event. Again, challenging your perspective on taxes. But now that we see it, we understand how are we going to go from gross to net income as we make money. If you remember back, this was one of the first mistakes of the golden rule. To really dive into this, we're going to have to head back to the kitchen. So when you cook a turkey, let's call it a 20-pound turkey for Thanksgiving dinner, you have to begin by removing some things. The giblets, the gizzards. Some people, Californians, even remove the skin. Down in the South, spend some time in New Orleans, they throw that whole thing in a deep fryer, eat it all up. Do me a favor in your spare time. Google a turducken. It'll make your day. But as you look at how you're removing items from the whole turkey, this is oddly similar to going from gross income to net income. You got to begin by removing some giblets and gizzards. Let's talk about exactly what those are when it reflects to your income taxes. So as you start to look at that gross income, what you thought you were going to take home, you start to see the giblets and the gizzards that you're going to have to remove. Those could be your federal income taxes, what supports the United States government. Those could be state income taxes. Depending on what state you're in, is different percentages. California, all the way up to 13%. North Dakota, all the way down to 1%. Are there some that have zero? We'll ask that soon enough. And then you start to look at possibility of a city tax. A city income tax. When I used to play in the National Football League, we'd go play the Philadelphia Eagles. And before I left the stadium, I would have to pay my income taxes to the United States, the federal income, to the state of Pennsylvania, and then the city of Philadelphia wanted a cut too, up to 3 or 4%. We would walk out of there having paid over half of our check in income taxes. Now, nobody feels bad for professional athletes. But this last giblet that you see removed is FICA. One of my favorite tricks in the NFL was to watch a rookie open up his first check and ask, who is FICA? Well, FICA is an automatically deducted federal payroll tax. And I use the word automatically in quotations, because if you're self-employed or a 1099 worker or an entrepreneur, it is not going to be automatic. But it is going to be automatically paid. So you will have to pay that. FICA goes to Social Security, that retirement income we've talked about, that in Chapter 1 we're not going to depend on. It goes to paying health insurance, Medicare, for older generations. And it goes to paying unemployment insurance. Those are 3 items we're all going to need at different parts of our career. Unemployment insurance, let's look back at that coronavirus. That is a moment in time where that resource was utilized and we were all happy we had paid into that insurance. Oh, we're doing this again. Okay, you got 4 questions in exactly 1 minute. Go.
Yes, thank you. When are taxes due?
Great question. When are taxes due? Mid-April. Start preparing in February and even March, but they're due April 15th. That date can move, so mid-April.
What is due in April?
What exactly is due? Good question. The 1040, it's a summary of all your taxable events throughout the year. A W-2 comes to you from your employer and is really just about your wages. 1099, very similar, comes to you about your income. 1040, summary of everything, and you send that to the government.
What is a deduction?
Deduction, knew that one was coming. Deduction lowers your taxable income. Did I say that right?
You did.
Taxable income. Making your tax liability less today. Last question.
What is the difference between the two deductions?
Way to make it count, kid. Standard versus itemized. Do you have $1 million mortgage? Probably not. Are you going to pay $20,000 in medical expenses? I hope not. Are you going to give away $15,000 in charity? Nope. Okay. Choose the standard deduction. It's going to be $12,400 in 2020. That's a gift. That means free money that is not going to be taxed. Now, as you look at your society choice, your money buckets, make sure a quarter is going into this important society choice. It's worth it. Trust me. Question of the day. What tax form do you file in mid-April? Your action item? Your status? Probably single. Dependents? 0. Deduction? Choose the standard, $12,400. Tomorrow? Well, I told you a quarter, 25%, to be put into that society bucket. Let's go see how that's calculated and if it's right for you.